Hi there, I'm Malcolm Graham Wood and welcome to my CEO interview on Core Finance. Today I welcome back Colin Harrington, the CEO of Zephyr Energy. Welcome back, Colin.
Thank you, Malcolm. It's good to see you.
It's great to see you too. And yet again, every time I seem to speak to you, there's huge amounts of things going on and progress being made. Two announcements so far this week. So maybe you can start off. We had the finals on Monday, I think it was. Although they're historic numbers, it's actually a good time for you to talk to the market about what last year has meant for this year. It's a totally transformational time for the company. What are your key picks for the coming year? I mean, you say that you expect all the acquired wells in the Williston Basin to be online and generating significant near-term cash flow. When and what and how much? What's the situation in the Williston?
Yeah, so the Williston is we talked about before. Those duck wells have been completed, and they're going through the cleanup process right now, and we expect them to be online later on this summer. So cash flows to the company by September, and couldn't be more pleased there. I think the operator's done a great job. It's nice in this type of oil price environment where we've just crested over $70 a barrel. That they've really moved to speed things up, and we expect to see nice production and good cash flows from them. I think we've said we'll average about 720 barrels a day in the second half of the year from those from the first 6 months of those wells coming online. So sizable position for us. We also have 2 more wells that are being drilled, much smaller stakes, but those are the continental wells that we picked up as well. And like I said, I just couldn't be more pleased. You and I have talked a lot about how these results. You do an annual report and it really is backward looking.
Yeah.
It's a good time to reflect on things and both reflect to see the changes from last year and set some goals for this year. And so one of our goals last year was to find production that would make sense, that we could put in without disrupting too much of our corporate structure. And we think we're really, really happy with those Williston wells so far. So much more to come, and we'll let everybody know once we get initial production reports there.
And have you got? You're still talking to presumably other people about other potential acquisitions.
Yep, we've got good ears on the ground. We certainly will continue to look. We like that a lot, as the DJ as well. We like the DJ. But the other thing is right now, obviously, we're preparing for a major drill in July, and so we've got a lot of focus just making sure we get that done in a safe and effective manner. So that's really taking a lot of our focus at the moment. And obviously, we've been doing a huge amount of work on our reserves analysis as well. So not to pivot too sharply to the paradox, but I think what you'll see certainly in the next month at least, is a lot more focus on that State 16-2 horizontal lateral that we'll be drilling, and a more detailed view of the cores and the logs that we got across our reservoirs. So both of those things will be upcoming, I expect, before long here.
And there's still a decent M&A market out there, isn't there, at the moment, that I'm hearing about?
Yeah, absolutely. And it's interesting, even with these strong prices, you really don't see a lot of capital flowing back to the smaller end of the sector. And that's everything from ESG reasons, as you know, to particularly the U.S. E&P industry had been so poorly managed as a whole and performed poorly in the stock market over the last decade. Capital's just dried up. There's not a whole lot of money coming in from Wall Street or from private equity. It's certainly not, in terms of the cheap leverage that we saw last time around.
I saw KKR and Independence doing a deal yesterday on the slightly bigger numbers, but there's still plenty around. Can we move over to
a lot of M&A deals, without a doubt? But in the small end of the market, it's a very good time to be a buyer.
Yeah.
So we're certainly working hard on that.
Should we take a look at where you are in the Paradox project? If we may, Colin, we've got a number of different formations and sections to drill out there. I mean, what's the drilling program for the coming few months?
Well, certainly the first focus is drilling the Cane Creek Reservoir. That's the State 16-2 lateral that we're kicking out from the existing wellbore. And that will target the Cane Creek. It's targeting natural fractures, and that's always been our first point of business, first target there. But we are doing this analysis. As you know, it's taken a long time, but that's a good sign from my standpoint. There's a lot of work that's been done both by us and by our partners and third parties here to look at both the Cane Creek and the overlying reservoirs, both from a natural fraction standpoint, but also from an artificial fraction standpoint, because we think there may be some intriguing aspects there as well. So that work is coming. It's coming together nicely. We'll have data out on that before long. But certainly we think, given what we saw in drilling the vertical well going down, shows across a number of different of reservoirs as we went down to the Cane Creek. I'm happy with what's being done, and I hope we'll have a much better understanding of it very soon.
So when will you be able to update the market on when you're going to drill the prospects again?
Well, that's a good question. It depends on when our work is done. So for that analysis, we will release it. We're not sitting on anything, but we will certainly have it out when it's completed and signed off by our partners and by us.
Excellent. If I may, I'd like to turn to the news from yesterday, which followed on from that. And in that news, you've pledged to achieve 100% carbon neutral operations by the end of September this year. That's in what you call your launch of the Carbon Measurement and Mitigation Initiative with the Prax Group. Perhaps you can tell us a bit more about this. And I mean, it seems to be pretty optimistic to get something as big as this done in a few months, but how are you doing it?
Well, as you know, we've been accused of there's no lack of ambition to some extent here. We set big goals to go after them, but in all honesty, it's much easier to do when you're a company our size and without legacy heavy assets, without refineries and so forth. It's the type of goal that it's an ideal time for us to do because we've just become a producer. We have a lot more production coming on stream, but we think this is the time to set our goals and to begin as we mean to go on. And you and I, again, have talked about this before. There are a lot of companies doing really interesting things out there right now, whether it's getting into geothermal development or setting up direct air capture facilities, all the sequestration work. From my standpoint, again, we're a small company. It's really important that we stick to our knitting. We spent a lot of time focusing this company very dramatically just on the Rocky Mountain basins and E&P. I don't want to branch off into a new business, but by doing what we're doing with Prax, it's a very nice way of offsetting our own direct emissions around our operations. So we're thrilled about it. We really like working with Prax. They've helped us immeasurably start to quantify what our footprint is, and they'll be a great partner for us going forward.
So what would have been the alternatives? I mean, I'm talking about people who are doing solar, running plants and so on, and geothermal and so on. What did you board look at when you thought about carbon neutral?
Well, there are two ways to go about this, and one is minimizing your emissions that you have, and we've looked at some really interesting technology there. Continuous air monitoring, for example, on sites, rather than something that right now emissions monitoring is done more sporadically, and we'll continue to roll out things like that. But in terms of really negating our carbon footprint, this is by far and away the best path forward. And we don't have a solar development team. I don't plan on getting into the solar development business. Kudos to those who do. I think it's wonderful, but it's not our core business. We are really focused on getting our Paradox asset developed and on buying other interesting E&P assets, and that's where I want to remain. So I think for us, the offset market is by far the best way to go about sheltering those emissions.
So there are obviously costs and potential benefits that arise from these actions that you're up to. Talk about them along with the environmental benefits that you're hoping to squeeze out of the business over the next 6 months.
Yeah, so there are definitely costs and benefits. Costs are simply the money that we will pay to buy these emissions credits, these VERs, Verified Emission Reduction Credits. We expect that to be less than $1 as you go forward in terms of direct cost to the company. And on the flip side, benefits, obviously, first and foremost, the environmental benefits we think are enormous. That's our primary driver. But there are economic benefits as well. Doing good for the environment here also can be good business. And we think if we are selling carbon neutral barrels or net zero barrels, that we may be able to get premium pricing on the other end from the end users of that. And there's certainly evidence in the market that you're beginning to see, particularly around gas trades right now, some of the things that Project Canary is doing, for example, where they are securing premium pricing for net zero barrels or responsibly sourced gas. So, that's a big benefit. Obviously, I'd love to expand our investor pool. When you've got 30 trillion of ESG focused, pools of investment out there, anything we can do to start to move into that market, I think will benefit all of our shareholders. You definitely see demonstrable, reduction in the cost of capital, particularly on the debt side, when you're looking at how lenders treat this business now as well, or even if they will treat it here in the U.S. And I think it'll help from a regulatory standpoint as well, particularly in this with this current administration and with our local communities. All around, I think it's got good positive benefits, both economic and environmental. So it was very important to our board that we do this. We've talked a lot about being responsible stewards of our investors' capital and responsible stewards of the environment. I think we've done very well delivering on the investment side of that equation, but we really wanted to make sure we were delivering on the environmental side of that equation as well. They go hand in hand, and I'm really happy to be pushing both of these things forward now.
Well, you're certainly delivering. There's no doubt about it. It's really good to see it. So just to finish up, I mean, I always say how things looking for the rest of the year, but I mean, if we were to have a look at the Zephyr whiteboard in your boardroom and have a quick peek at that, what would we see? What would the investors see? Shares have done very well. People are confident that they've got a lot more to do.
Yeah, you'd see very small print because we have a lot that we do want to do. But no, a safe and successful kickoff and development of the Paradox is first and foremost. That's by far the most important thing we can do. And adding other accretive transactions or contiguous acreage to some of our positions, again, very much would like to do that as well. And a successful rollout and being fully carbon neutral by September. All of those things are our aspirations, and I'm confident that we're positioned well to do it. Now we just have to, again, deliver. It's up to us, particularly around the Paradox well, to do our best to get that developed successfully.
Well, it sounds like you really are delivering, Colin. Thank you very much indeed for speaking to me again from Washington. And it's it beats speaking from a truck in Utah, I guess. But
I prefer Utah at this point.
It's always good. Yeah. Thank you very much for joining me today on my CEO interview. Today, my guest has been Colin Harrington, the CEO of Zephyr Energy. Thank you very much for watching, and we look forward to seeing you again soon. Bye now.